Hey, good morning, everybody. It's Amber. Today is Monday, October 27th, 2025. I, of course, am here live, hoping you will join me as I do this each and every weekday morning, 9:30 a.m. Eastern Time. Coming to you on Facebook and on YouTube. If you're here this morning, say good morning. If you are watching the replay, don't forget in the comments, just give me hashtag replay. Let me know that you were here. And if you would like a quick reminder that I am going live, you can get a text alert at hmmr.io/reminder. At least you can sign up there and then get a text alert each day as I go live, letting you know that I am here and we're ready to go. You can also use this cool QR code over here. And there you are. No cat ears this week, dude. I have a fly outfit coming in a couple of days, but that's about it. If you want, we can go with some really spooky fonts. Here, I'll give you some spooky fonts. Hold on a minute. Where is the font? There you are. Ooh, spooky font, Creepster. So you want spooky? We'll give you spooky. Let's go ahead and let's say hi to all the live folks here this morning. We've got Ron Siegel said today is National American Beer Day, and but however, he's not a beer drinker. Is beer even? I'm not a beer drinker either. Giddy up, Mr. Randy Tickle. Great to see you, sir. Mike Tebow, Tim Klyla, great to have you here. Mike Brown, Rob Stewart, Amber Moser. It's funny because now it's showing me, instead of names, it shows me your YouTube at name on here is what we see now. Isn't that weird? Good morning, Amy Blauser, Leroy Romero, Hojo the Elo. All right. Good morning. Kyle Mazikas, Kenny Rivard, Deb Dickinson, Michael Scott Love, Vicky McSweeney, Brandy Brickler. Good morning. How was Fuse, y'all? Those of you that went to Fuse, how was Fuse? Let me know in the comments. Did you have a good time? Did you miss me? There was plenty of people there, so I know you didn't miss me, but did you have a good time? I went camping, glamping with my wife and some friends and unplugged, and I got to tell you, it felt good. It felt good. I needed it. So didn't spend a lot of time on the screen. So definitely enjoyed it. We were out in Chattanooga. So we saw Ruby Falls. For those of you who might be familiar with the area, Ruby Falls and Rock City. I've seen Ruby Falls before, but I have not seen Rock City before. So that was cool. It was fun. We had a good time with that. So, all right. Well, if you are here this morning, say good morning, and let's go ahead and get started. We're going to jump in and talk about what we got going on this morning and where things are at. Here you go. Good morning, Kim. All right. So basically taking a look here, we'll start out looking at mortgage-backed securities. And on Friday, mortgage-backed securities were right around 101.20-ish. And you'll notice today we were right around 101.20-ish. There's really not much of a move here. It's really just kind of plain Jane. And that means rate sheets should be similar to what we saw on Friday. And if we take a look here and where things were at, we started the week at about 6.22. We improved a hair on Tuesday. We were flat on Wednesday, slipped just the most minor amount on Thursday and Friday. I mean, realistically, this is about as flat as you can get. About as plain Jane, and we're likely to see a lot more of that this week. Monday, Tuesday, Wednesday morning, we're likely to see rates stay very close to where they are at right here. Let me move this over and we'll go over that. So we're very likely to see bonds hold steady before the Fed meeting. Remember, the Fed meeting comes up on Wednesday, and even more important than the Fed meeting is Fed Chair Jerome Powell's press conference following that. So right now, mortgage bonds, they go up a couple basis points, down a couple basis points. They're basically flat. Remember, we're testing that 101.29, 101.30-ish level right here. You can see right here, 101.31 is the high point that we got to on the 22nd. Before that, we started at 101.30 on that day. We closed at 101.29 here. We closed at 101.28 here. You can sit and argue within a couple of basis points, but basically we're right around that 101.30 mark. So we'll just call it 101.30 today. So we're looking at 101.30. And the reality is that all last week, look at these wicks on these candlesticks, could not break through the technical levels. However, 10-year treasury yield, that is a red flag. So we'll put it in red. That is a red flag. So we've seen the 10-year push up past 4, which is not something that we wanted to see happen. That 4% is a technical level. It was a technical support level, giving us support from breaking through it when it was down below 4 over here. However, it has now pushed back above 4. We're going to watch today. Right now it's at 4.03, 4.02, rounding up to 4.03. If it were to break back down and close at 3 point whatever, that would actually be a good sign. Otherwise, it's not likely that we see much movement anyway, but you could see rates, mortgage-backed securities could follow suit, and we could lose a little bit of ground here. So you see right now we're at 101.22. We could see that kind of lose a little bit. So good morning, Randy. Good morning, Jerry Avila, Allison Foy. Randy likes the spooky font. Nickname is Hojo. There was a realtor, Holly Johnson, back in the day, so you were Hojo the LO. Yeah, no, that's great, Holly. So anyway, those are the technicals. When we look at this, there's really no room to see improvement when it comes to the technicals. When we're looking at Fed futures, it's more of the same thing, right? Markets are pricing in a 96% expectation that we're going to see a cut this week at Wednesday's meeting. And they're pricing in a 96% expectation that we're going to have another cut in about 6 weeks in December at that meeting. The question becomes, as we work into January, you'll notice that has become just a straight up coin flip. In the past, there was a little bit more of a lean towards the idea that we would have another cut. But basically, this is what we're waiting to see, is what do markets think are going to happen by this time next year. Not next year, but this time at the beginning of the year, not this time. So what do they think is going to happen at the beginning of the year? So 3.5 or 3.25, but by March, markets are pricing in a much higher expectation that we would see another rate cut by then. Markets are expecting to see this happen. If we don't see this happen, you're going to, or at least if we see speculation that this isn't going to happen, that's going to cause rates to creep a little bit higher. So when it comes to mortgage rates, there's really not a lot of room to improve from here. We would have to see signs of real, just a lot more labor market weakness, a lot more economic weakness. There was an interesting article in the Wall Street Journal, real quick, about companies and they're growing without hiring. So this is kind of something that the Fed is also watching, and it's an interesting take on things, right? So this is basically an article that just goes into detail about the expectation that companies are going to be able to use AI to grow while using less employees. Companies increasingly aiming to maintain or reduce workforce size, anticipating AI will automate tasks and boost productivity. So we're going to see this happen. So this is why there's ideas that you'll still see an increasing economy as companies make money. However, even if you see labor market stall, and this is a factor that's coming into it. The other factor, of course, is tariffs. And markets have learned to deal with the Trump volatility and the Trump tantrums. So over the weekend or before the weekend, Trump was all pissed off that Canada was running ads featuring Ronald Reagan. I think I read something where it was kind of some cut and paste, so it wasn't the true message. But basically, they were riling people up and using Reagan's words for propaganda against tariffs. Trump didn't like it, so he suspended, all trade talks with Canada, and then they kept running it over the weekend. So he added an additional 10% tariff on Canadian goods. I know many of y'all support this guy, and that's fine. But this kind of behavior is very difficult. This is what markets generally are worried about, and why they're pricing in the unknown. And it's what the Fed is talking about. So, we got the CPI inflation data. It came in showing inflation slightly better than expected. Remember, the initial reaction to that on Friday was a strong knee-jerk reaction. You could see it right here. Mortgage-backed securities went up quite a bit. This is good for mortgage bonds. This is good for mortgage rates and mortgage pricing. But then by 10 o'clock, that had washed, quite a bit down. So we went from 101.13, 101.14 to 101.18. I mean, it was only a few basis points in this difference between here and here after this all got washed out. And it did creep higher through the day. It kind of crept back again. But not enough to make any big move. And then this morning we've lost some of the ground on that. So it really, again, you're not seeing that. I know that we could talk a little bit more about CPI. Someone asked me an email about something or other. We could get into the shelter and the owner's rent costs and blah, 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 and different things. But at the end of the day, it doesn't really matter. It really doesn't. Inflation is not been a concern outside of tariffs. And the tariffs still continue to be a concern because of behavior like this. So we're definitely going to see that. Yeah, that's right. Exactly. Well, it's all propaganda, Ron. I mean, we know Ron's pointing out that the ad doesn't mention that Reagan's speech that day was at a press conference announcing tariffs on Japan. And the reason there were tariffs on Japan was because of concerns on where Japan was going. But we won't make this all about tariffs. Again, I don't like them. I don't think that they're doing anything they're supposed to do. I think they're just a tax that we pay. Costs get passed along to the consumer. There was an interesting article, Wall Street Journal, about the furniture in North Carolina and the furniture companies. And, even though they do 80% of the product is made in America, they still bring in things, certain wood, certain fixture items to hold things together, certain fabrics that are brought in from overseas, and then they're tariffed. And these companies are working on margins, so therefore those costs are just being passed along to the consumer. The idea that I still, Ron, I argue vehemently, the idea that any of the costs of tariffs are being passed along to other countries and not to the consumer. I don't agree with that. I don't think it came in there at all. But there's a lot of optimism on this week. We're going to have, there's some trade stuff that happened with China that was pretty good this week and heading into this week, and there'll be more on that. Equities rallied as signs the U.S. and China were closing in on a trade deal, stoked optimism at the start of a bumper week in which Federal Reserve and earnings from tech giants will also shape markets. So there's not a lot of reason to expect rates to improve this week, y'all. We have to see signs that the Fed is going to drop rates, that there's economic weakness, that there's labor market weakness, that there's not inflation or disinflation or even deflation. None of that is really going to happen or likely to happen. Here was an interesting article, by the way. And yeah, I mean, you could say that, Ron. Ron said shelter is too large of a weight on CPI. I think it's about 30%. Now, only 8% of the population move each year, yet CPI weighs shelter at 44%. Is it 44%? I thought it was in the 30s. But either way, maybe if you do all the shelter costs. But yeah, I mean, that's a big part of that. That's why the Fed uses the PCE. The PCE data would come out on Friday, but remember, we have this thing called a government shutdown, and the PCE, it's not the Bureau of Labor Statistics. PCE from what department? It's not the Bureau of Labor Statistics. It is the Bureau of Economic Analysis, the BEA, but also closed. So it's on the calendar for this week, but we wouldn't get it. We won't get it this week unless there's a breakthrough in the government shutdown, which so far there has not been. Not a lot of headlines about the shutdown, by the way. It really is not getting any airplay at all from any of the sources that I see. So as we hit, but this data we would get here, it won't be there. GDP data, I wonder if that'll come out. I'll have to take a look and see. I wonder if the GDP data, we would get the Q3 initial. Remember, when it comes to GDP data, you get the initial, the revised, and the final. So we would get the initial for Q3. There's now reports showing where the tariff appears. Only about 16% is in price increases. The rest is exporting, government subsidy, and price compression. Yeah. I would love to talk to you more about that offline. So anyway, looking at what we got here, y'all, I'm going to wrap it up. There's really just the only thing that we're going to really focus on this week, of course, is the Fed meeting. It is on Wednesday, big Fed meeting. Fed's going to cut rates. What will Powell do? Are they going to say, really, they're going to get a lot of questions about what are they doing with the lack of data. This is going to roll into next month when we really don't have any data, because all of the data that would be collected right now isn't being collected because those departments are furloughed. So the data that we're releasing, like the CPI that had to be released, that was September data. So it was gathered while the government was in session. But now, as we get into next month, we're going to have a lot more of things that can't be done. So we'll see where that goes. But right now you see, again, we were up a couple bips, down a couple bips. So right there around that frame, it's just not a great area. There's no urgency to lock anything, but there's also not a lot of expected benefit to floating. Tomorrow we'll talk more. We'll break down the Fed a little bit more. I don't think this Fed meeting is going to really give us a boost. I don't think there's any room to give us a boost. There's not a lot of room for rates to improve from here. There's not a lot of room for speculation for Fed rate cuts to increase, for Fed rate cuts, for more Fed rate cuts. So the idea that we could see a January cut, that's the only area that could grow a little bit more, and you might get a little bit of a bump on rate sheets with that. But otherwise, there's really not much of an expectation that bonds are going to rally from here. I don't know if we would get any kind of a technical bump that's going to help bonds to really take off. I just don't think it's going to happen. Even if the Fed says, if they do cut rates, but it's all been priced in. So in theory, there's not much room to move. The 10-year not likely to drop significantly. Even if we get back in the threes, you're talking the 3.9x area. You're not talking that it's going to continue to drop lower. So tariffs going to the general fund. It affects the amount of borrowing the Treasury needs to meet its spending needs, in theory. But yeah, it should. Official gross domestic product reports to the United States is the Bureau of Economic Analysis as well. Yeah. So I mean, when we look at the data that's going to come out this week, if the government shutdown remains shut down, I don't imagine that we're going to see GDP data. I don't imagine we're going to see PCE data. So just like we didn't get the producer price index, but there were some places that said it was going to come out anyway, which is very confusing to me that they don't get that. So, but anyway, that's it, my friends. I know that you're looking for more than that, and I don't really have it for you. You're just not going to see rates really improve too much. Should be a pretty calm beginning to the week today, tomorrow. Wednesday, we're going to see more movement when we get the actual Fed meeting, but I think it's going to be more like bump up and down kind of a thing. I don't think we're really going to see rates improve, but we want to keep our options open. Loans closing near term are the most at risk, and with this 10-year being above 4 again, I would lean towards locking loans closing in the next couple of weeks, but we can float into the Fed meeting and see, where things go. But if you like today's rate, you don't want to risk losing any of the pricing, because we may go from, 6.19, we may go back up to 6.22 or 6.23 like we did here. So if you don't want to risk that and you lock something closing near term, something's closing in the next couple of weeks. Otherwise, it's really, we just keep the options open. So, all right there, my friends, I'm going to wrap it up. Thank you so much for joining me, Ron. As always, thank you for your stuff on there. You said you bet the data is still collected, just not processed, but how would they collect the data if there's no staff? So, if those departments are closed, is the data being collected? Are they furloughed? that depends. Some, the critical departments are working without getting their paycheck, but the ones that are furloughed are sent home. So we'll see. The faxes are probably still received at BLS. They just do nothing with those faxes. Yeah, I don't know a full detail on how they really go about that and how much labor is involved. So, Leroy, take care, my man. Have a great one, y'all. We'll see you tomorrow. Make it a fantastic day. Bye-bye.